module, I'd like to talk about how to finance your first real estate deal, how to get your first loan. I would say it's quite hard. Well, it was quite hard for us also, when we got started. And to get the first deal financed, you've got to be persistent and you've got to think big and stand tall. I think those three things come to my mind. I remember we started, myself and my partner with only $500. I think our passion, our drive, our positive attitude, and the hard work in going through lots of commercial real estate deals, analyzing lots of them, getting a coach, I remember, learning from universities like this one. Those things helped a lot, and then it took us almost 9-10 months to close our first deal, I think. So how we started up was by getting a little loan from a relative who was able to give us a small loan. So you could do with a little starting capital yourself, or with no business background or real estate background, you can learn these things and then move forward. Securing financing to purchase our first property was a major hurdle and the housing collapse was also fresh, and then the stock market, ups and downs and all that, foreclosures happening. The banks around the world and in USA were very much tightened, and they were not lending to all different commercial real estate. Fortunately, they were lending for the multifamily, which is our expertise in. In our eyes, we were like low risk. We had secure, well-paying jobs, of course, and we were doing it as part-time. Well thought, our business plan was strong. We had good credits also, but the bankers did not see it quite in that same light. That was the thing. The lender said, "What kind of experience you have? How many properties do you own?" A lot of stuff. So that's why we had to really get ourselves psyched up to convince the banks that we were starting out, but we have a long way and we are not going to quit. And then we have looked into these properties. These are really good. And we formulated a plan of attack, and that's how we got our first deal. Now, here are some of the steps that you might like to look into to get financing. I highly recommend that you also talk and build relationships, with some strong loan brokers, because they are the ones who can really open up your horizon as to what's out there, what kind of loans are available in your area where you are purchasing commercial real estate property. They charge 1% origination fee, which is the same. You don't have to pay 2%, like one to them and one to the lender. We end up only paying 1% origination fee, which is their commission. So not a bad idea at all for you to build that relationship with the loan brokers, and maybe not one, maybe two or three. And also what we found was the local community banks that's where we got started. We started, seeing some officials there and tried to show them our properties, and they are many times able to give a hearing rather than some big giant banks, like that. The other thing is the skin in the game. This was another question was asked many times by the lender. Okay, how much are you guys bringing into the deal? To be very truthful, we have never put any money into the deal. We just paid $1,000 to control the interest of our equity and cash flow. That's how our syndication lawyers have done it, and they have been doing it for a long time. So the thing is, if you do put some money in there and you have money in skin in the game, that's fine too. That will actually bring vote of confidence a little bit higher, because you're risking your money, and then the lenders might kind of look at you a little differently. And then you've got to present the deal with specific ins and outs and long range planning, intent, what you plan to do, how you're going to do it, preliminary due diligence that you have done. If you're going to renovate it, what it's going to cost, and how you're going to make profit, how you're going to pay the mortgage. All those things lenders want to really know about it. They really do want to know. And then again, be prepared for a personal guarantee. Boy, oh boy, that is so true. the lenders sometimes they say you've got to have personal guarantees and so forth, and we have put our properties and things into other LLCs and all. Fannie Mae loans never ask you for personal guarantees, but it will take you some time to qualify for Fannie Mae loans and so forth. So be prepared. And then, again, you can bring a partner, a loan sponsor, like I mentioned in some other modules also. You may need to bring a loan sponsor and pay them some cash flow and equity so that they could qualify for you or with you to get that first loan. You've got to get that break, first loan. Otherwise, sometimes it's really tough to get it going. You got to seek out a partner who might have experience or not experience, but is well net worth, and they have the liquidity of cash. They can really help you. And be confident. I think the one thing which we really did a lot of was to really show our strength in numbers, and we could talk to loan brokers and the bankers and all that with a good confidence, and that's what it's all about. Your presentation has to be really thorough, and you may not have experience, but you have to fake it till you make it kind of thing. After a few attempts, you learn what questions to ask and write it down, and then write down the answers to it, and so that you can really be very confident and clear and erasing the doubts about your inexperience. Look professional, stand tall, and do strong follow-ups with the lender brokers. It might seem shallow, but the lenders likely consider everything possible before they lend to you. They are giving you so much money on your ability to make sure that this loan doesn't go bad. That's the biggest worry. And then the other part is seller financing. I wanted to mention, to get your first deal, you might like to look into seller financing and look at some commercial assets where the sellers might be willing, even though they may not advertise, but it's good to ask them. Ask the broker, ask the seller. That really did help us, by the way, because when nobody gives you loan, lenders want to see the experience. Seller financing is a great way for you to get a loan. And then succeed in your first few properties. Closings are very critical because you're setting the trend. Your ability to borrow in the future is going to be based on how well you have succeeded in getting few properties under your belt and syndications and all that, and then the ball just rolls and rolls and rolls. A lot of fun, a lot of excitement, and the banks will be actually asking you, hey, when do you want to borrow more money? Every market and every lender is different, and every borrower faces different circumstances, various obstacles. Some to be investors, financing through a traditional bank, if not an option, don't give up. Just don't give up. You will find yourself unable to borrow through a bank. Consider other options like I have outlined in this program, and then look into private money, family, friends, and hard money even, There are pros and cons of all these, but you want to get that deal done. Conquer your first deal, set a good trend, and keep on going.